Hi everybody, I hope you're doing really great. Thank you so much for tuning in to my video. Today's video is on different types of mortgages. So if that's what you're wanting to know, guess what? You have come to the right place. If you haven't liked my channel, if you haven't subscribed to my channel yet, I would really appreciate that. And if you enjoy the video, please be sure to like it when we're done. And don't forget, share it with your friends. Help me spread mortgage peace. It would be a really good thing to do. So, types of mortgages. There are several types of mortgages, and I have created a checklist for that, of course, or a cheat sheet, and I'm going to put the link to that below the video, so please be sure to check that out. One of the types of mortgages, well, I'll kind of go through a quick overview, I guess, right? So we have conventional, FHA, USDA Rural Development. I say that wrong all the time, rural. I can't say that word, but that's okay. And then you also have VA. Those are the main types of mortgages. Now, in addition to that, you might have grants or bond money that could apply. Those are other types that are not so common and may be available to you in your area. So be sure to look into that. So, conventional. This generally seems to fit the customers that have at least 3% down and ideally have excellent credit. Of course, it's available if you don't have excellent credit, but for a number of reasons, it tends to fit that profile the most. Conventional is a loan where if you put down 20%, you will not have mortgage insurance. And if you do put down less than 20%, the mortgage insurance is not for the life of the loan. That is different than the other loan types. FHA requires at least 3.5% down and typically seems to fit people more along the average credit score versus the excellent. FHA, you have different terms, right? And depending upon the term and depending upon the down payment, there's a lot of different structures, shall I say, but let me limit the information to 30-year FHA purchase loan with only 3.5% down. You will have life insurance. No, not life insurance. Are you paying attention? Because that was a quiz. You will have mortgage insurance for the life of that loan. It will not fall off or be able to be requested off at some point like it used to be in the past. The regulations have changed on that. So oh my God, why do I keep talking about life insurance? The mortgage insurance is for the life of the loan on that program. And you have upfront mortgage insurance and your monthly. Now, some of you are saying, oh my God, I'm not paying that. Oh my God, that's ridiculous. You know, it's really not ridiculous. It's an option. And an option is great in comparison to no option. So if you want to not have mortgage insurance for the life of the loan, you want to have a wonderful interest rate, and you want to have no mortgage insurance at all, right? Then put 20% down and have an excellent credit score, and that's not the norm. So these programs like FHA, even though they have upfront and monthly mortgage insurance, they are still not bad, and they are still wonderful options that allow people home ownership. So don't let that deter you. Next is going to be USDA Rural Development or Rural Development. And that particular loan is 100% financing. So there's no money down versus conventional 3%, FHA 3.5%. Now we're here. I call it RD, abbreviated. And RD is no money down. So that's huge, huge positive. Now, RD does have income limits. FHA and conventional do not. RD also has property requirements as far as location. Only certain areas qualify for RD. So you've got to keep that in mind. With RD, there is upfront mortgage insurance and monthly mortgage insurance, and it is for the life of the loan. Another super, super great program that does tend to fit a lot of first-time home buyers. Because, you know, when you're buying your first house, you don't have a ton of money. I mean, most of us don't anyway. But so first-time home buyers, average credit scores, that's usually a good fit for an RD loan. And then last but not least, VA. This is for qualified veterans. Veterans, thank you so much for your service. These are one of my favorite loans. You guys have earned the right to have this wonderful eligibility. So thank you so much for what you've done to get that, or earn that. Earn it for sure. Definitely earn it. So VA, it is or can be 100% financing, which is wonderful. There is no monthly mortgage insurance, which is another huge bonus. And there is upfront mortgage insurance, but that depends on eligibility, because you may qualify for the exemption where there is no upfront and there's no monthly. So another great program. I like all of these programs. They each have their pluses and minuses. And just like I always talk about, everything is so case by case, okay? So an FHA loan might be fantastic for you. A conventional loan might be fantastic for your neighbor or your friend, right? So what do we want to take away from this? There are lots of opportunities for home ownership. And if you put in the time, the work, and the research and effort, then you deserve to own a home of your dreams. And it is not impossible. You want to make yourself knowledgeable and know what you're getting into, know what your goals are, to see what is going to be the best program for you. I really hope you liked the video. I really hope you guys are enjoying the education. I'm really trying to spread mortgage peace, and I appreciate you tuning in. I would love if you share this video. I would absolutely love that. I would love if you subscribe to my channel, and I would appreciate the like. And please DM me if you have questions. So I hope you have a fantastic day. Here's to mortgage peace, and I will see you in the next one.